welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be having a look at the very first, as it's been called, the God Candle. What is a God Candle? Well, we'll go through that and what we can expect going forward and the next few resistance levels for the Bitcoin price. I'll also be going through the gap that we need to be mindful of, and that is the CME futures gap. And as per usual, we'll have a look at exactly what's in the news, the wider markets, and the 60-day cycle to make head or tail of what's going to happen with Bitcoin in the coming weeks and months. So if that sounds interesting, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wide research before you make any investment decisions or any swing trade decisions. And of course, we'll start off with the God Candle that we got yesterday. And the question is, what is this God Candle? You may not even have heard of it. Well, for those of us who have been in this space for many, many years, we've been waiting patiently for this particular candle, and the definition of this God Candle in the context of cryptocurrency trading, particularly when discussing the Bitcoin charts, refers to an exceptionally large single candlestick. And the figure that most people put on it is the $10,000 candlestick move on one day. And it's often considered an outlier compared to typical price movements, signifying a significant market shift. And many people think this is a once-in-a-lifetime price surge on a chart so large that it's almost considered divine in its scale. So that's the background to the God Candle, in case you've not heard of it. So this is the candle that we got yesterday, and for the first time in Bitcoin's history, we actually had a candle from the bottom to the top of more than $10,000. So if I put a cursor on this green candle, you'll see at the top here, the H is for the high and the L is for the low. So the low of this was $85,003 and the high was $95,128. So we cleared this by $100. So there you have it. We have the first $10,000 Bitcoin candle. And the significance of these types of milestones is more psychological than anything else. And I want to give you the example of the 4-minute mile. People have been trying to break the 4-minute barrier to run 1 mile for decades and decades. It seemed to be a psychological barrier. This 4-minute barrier was truly the holy grail of athletic achievement. But just after it had been done, it only took 46 days for this to be repeated by John Landy here, an Australian runner, and then just a year later, 3 runners broke the 4-minute barrier again as well. So this is what we're hoping, that the significance of the God Candle here, it's not going to take another 15 years for this to print. We should see more of these print more often in the coming weeks and months, which would allow us to rapidly move very fast towards our target at the end of the bull market. And we'll have a look at the hammer candle that actually started it all off, which was on Friday, in the context of the 60-day cycle a little bit later on in the program. But in the meanwhile, many people always asking me about the resistance levels and where to take profits for those people who are trading. And for that, I would always refer to the 2 major moving averages as well as the pi cycle. So this is the yellow line here, which is the 20 simple moving average, and the purple line, which is the 200 simple moving average. And what we found here was that we seem to have tested the 200 simple moving average on the daily time frame before giving us this long wick at the bottom. And just like over here, we've now found resistance at the yellow line, the 20 simple moving average. But for the next resistance level, the higher probability play is the green line of the pi cycle, because once you break the green line, you normally find with a very high probability that when the price comes back up to it, it finds resistance at the green line, and then after a little bit of a pullback, it's usually after that that we tend to break above it. And we can look at some of these examples in the previous history here. If you go back to the green line, very important for traders especially, that when you break through the green line and whenever you come to retest it, you always get resistance. And then we have another attempt, and then usually you get through, and then it usually comes back and finds support. And if you go left here, you'll see exactly the same thing. Once we break through the green line, it comes and finds resistance here before eventually breaking through. So this is where you would find some sort of a pullback, a breakthrough here, and then coming back, find resistance here and here, and then eventually breaking back up again. So you can see quite clearly the green line of the pi cycle is incredibly significant and relevant and important for Bitcoin. So where is this green line at the moment? It's exactly at $97,000. So that's the exact level where we're more than likely going to find some resistance, probably a pullback, and then we're going to retest it again before we surpass that and test the next levels. And the next levels will be after that based on previous resistance levels, which are basically here at 99,000. Where we found resistance numerous times. So this is definitely going to become a resistance to get over. So we found resistance here, and lots of resistance and support here as well as there. And of course we had this long-legged candle which we've been following since the beginning of December. That's at 104,000. And then of course we have this 109,000 retest of the all-time high. So these are the three levels once we get past the green pi cycle line. So 97,000, 99,000, 104,000, and then the 109,000. And the question is, in terms of the timeline, we're going to have a look at the 60-day cycle of what we can expect in the new cycle that we've just started, which will take us to the end of April. And before we move on, just to have a look at exactly why the price came down to the level that it did, we had the small matter of this particular gap on the CME futures markets, and this gap was at 77,930, and this candle here on the Friday where the price had a flurry down to these levels, the low came to 78,675. So it didn't quite make the gap. Normally comes back and fills the whole of the gap, so I'm not quite sure why it didn't do that, but for whatever reason, if it doesn't come back to fill that gap this time around, then the chances are, the probability is that in the next bear market this is something to look out for. And of course, since Sunday, we've now created a new gap here from the Friday's close, a high of 85,700, and the new candle starting on Sunday at a low of 91,000. So as we know with some experience that many of these gaps tend to get filled up very, very quickly, but when they don't, the market does come back and refills those gaps later on in the cycle. So whether it's going to be in this current cycle or it's going to be in the bear market in the next cycle, but this is something to look out for. And the question is, what actually caused this God candle? And the main news in town is this particular story here that President Trump has said about the crypto reserve to include Bitcoin, Ethereum, Solana, XRP, and Cardano. And this was the message here, where he says a US crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration, which is why my executive order on digital assets directed the Presidential Working Group to move forward on a crypto strategic reserve that includes XRP, Solana, and Cardano. And he wants to make sure that the US is the crypto capital of the world. And just above here is added that obviously Bitcoin and Ethereum, as other valuable cryptocurrencies, will be at the heart of the reserve. So this is what really triggered off this big candle, and hopefully we'll have a lot more of these candles to come. And what this has done is, when we look at the liquidity heat map here, which is giving you the leverage players and their stop losses, you can see there aren't many zones on the bottom side at the moment, but we do have the upper ranges which have been taken out here with these prominent yellow zones here. And the next zone up is the one at 95,100. So expect some resistance there, but other zones are now developing around 96,000, and with the green line of the pi cycle, they'll be around about the 97,000. So this is where we're heading at the moment, more to the upside rather than the downside. Okay, before we have a look at the wider markets, we're going to have a look at the Fear and Greed Index, which has had a very turbulent last few weeks. Currently, we're up to 33, moved very quickly up from 26 yesterday, and last month this was at 68. And as you can see with the chart, we had reached extreme fear on the 27th of February. So we've had a little bit of a roller coaster with the fear and greed. And what this decline did was to suck out all the sentiment out of the market. And we can see this represented by the ETFs and how emotional people are in terms of the fear that they have, that as the market falls, they start selling at the wrong times. And last month, you can see that we'd reached 70 just on the 4th of February. So just 1 month ago, we were at 70, and that's gone all the way down to 10, moving from extreme greed to extreme fear in the space of 1 month. And you can see the sentiment being reflected in the Bitcoin ETF overview here. When we look at the asset inflows and outflows, this reflects the panic selling that's been going on over the last 7 days, during which time we had that capitulation candle on Friday. So you had over 10,000 Bitcoins moving out in the last 7 days here, with IBIT, nearly 3,500 from Fidelity, nearly 2,500 from Grayscale, and just over 2,000 from ARC21. So when the time is to buy, people tend to sell, and when the time is to sell, they tend to buy. So this is unfortunately a reflection of the emotions of the volatility that Bitcoin can create. And if we move on to the dollar, what we can see is that we have this very strong resistance and support line at around about 107. So we've broken through that as we've been monitoring this, and now we've come up and found resistance one more time. And with yesterday's news, you're seeing another red candle. So we're going to see probably another leg to the downside, probably down to these levels at about 105. And the fall in the dollar should really encourage some of the wider markets to do much better over the coming days and weeks. And on the weekly chart here, you can see we got the evening star candlestick pattern here, which is bearish, and the pressure to the downside is now bearing fruit. So we do expect this to go further down, but somewhere along the line, we're going to get some sort of a counter trend rally back up, which is exactly what we do from time to time. But it looks like we've got a green light for Bitcoin to perform better in the coming days and weeks. And if we move on to the SPX, we found support here, as we have numerous times in the past. We were making our way into the midpoint of the cycle, which is in the middle of March, and it looks like on the RSI we seem to have bottomed out. So we seem to have now a clear run to go into the midpoint before we have a midpoint pullback and then a rise into the end of the cycle towards the end of April. So everything seems to be playing out as accordingly within the 60-day cycle time framework for the SPX. And moving on to gold, I mentioned last week that we were seeing a bearish divergence on the gold monthly time frame, as we saw a higher high on the price and a lower high on the RSI, and that we should be really expecting some sort of a pullback. And the monthly candle then closed with a wick at the top. So we've had a very strong move to the upside, and we know that once we get these big moves to the upside and you get these bearish divergences, they do tend to play out, which then tend to reset the oscillators for the next run, possibly the final phase of the current bull market. And you can see that with the weekly candle last week, we've got an outside bar, bearish engulfing candle. And these are the levels I've marked up here, which are the 38.2. The next one is the 50% and the 61.8 on the Fibonacci retracement. So these are at 2,760, 2,730, and down to 2,680. So we should expect some sort of a bounce here before the next leg starts. Okay, so moving on to the 60-day cycle for Bitcoin. I think some of you are not aware of what these lines mean. The red lines, they're the beginnings and the ends of the 60-day cycle. So the current cycle is here. Now that we've started a new cycle, this will end at the end of April from the current start that we've got here. And the white lines are the midpoints of those 60-day cycles. And I do have an extra yellow line here because this was the day of the inauguration of the new administration in the USA. And the reason for that was that we were expecting a big move into the inauguration, and our narrative was that this was going to prove to be a sell the news event. So this is where we're at the moment, and what we've had is a perfect time band cycle, because from the previous cycle here, the red line, that ended on day 56, and this current one has ended up right on exactly the time band at 60 days. As we know, we've got wriggle room of about 10-15 days either side, and what these cycles do is they allow us to add the element of time into our trading and investing. So this particular template that we've been following for the last 3 years was telling us that as we were coming up to this end of the cycle, in last Monday's video we were on this candle here, and we'd been going sideways all the while, and our expectation was that usually when you come to the end of the cycle you get a flurry to the downside. Now that could have been to this point here, which is a very strong support line. So this was actually the higher probability play, and it came down to that level there. But as mentioned in last week's video, we could quite easily have come down to the $85,000 mark here. But it seemed to have gone even further than that, down to 78,000. But the main significant thing, usually you'll find at the end of these cycles, if I move this to the right, you'll see there's a long wick at the bottom. So what happens is that Bitcoin tries to put in a bottom, and it usually gives you a signal, a bearish signal at the bottom. It can be a morning star pattern, or it could be an outside bar, bullish engulfing candle, or these dragonfly doji candles with a long wick at the bottom, or a hammer candle like the one we've just got here. So these cycles usually come to an end with this kind of a flurry to the downside. So now that we've got this, and usually this is confirmed in various stages. The first stage is to close above the actual candle, which we did duly the next day which was on Saturday, and now that we've got this God candle here, which is closed above many of these previous candles. So what this does is to confirm that this is the end of the previous cycle now and the beginning of a new one. And the question is, do we just go up from here? And as I've just given you the resistance points for the next levels, however, what we do have on the weekly time frame, that with that big candle that we got yesterday, the weekly has shot up and given us another hammer candle here as well. So we've now got a confirmation on the weekly as well. Now the characteristics of these candles, these hammer candles, which are putting in a bottom here, is that it's quite easy to run down these candles before we get the big move. So what Bitcoin does, and this is the same in all the markets, that in order to put the fear of people and to try and shake out the last weak hands, we can sometimes get a run down the wick before the inevitable rise to higher levels. And I just want to give you a few levels, of where it could come back down to on the wick of this candle. So if we have a closer look at this, and the way to get the levels on this particular candle, that if you use the Fibonacci tool, from the bottom here to the top, at the 38.2, this could quite easily come back down to the 89,000, which is here, and the 50% is at 86,000 on the green line here. And usually the higher probability play is the 84,000 at the 61.8 here. Now, because we got such a big, strong surge to the upside, then it looks like investors are not in the mood to take it down to those levels. So the higher probability play on this particular candle, looking at the characteristics of how this has ended, would probably be at the 89,000 or the 86,000 if it does decide to come back down to retest and shake out the last remaining weak hands out of the market before the inevitable move to the upside. So just coming back to the 60-day cycle template here, the reason why this is a very strong candidate for the start of the new cycle and the end of the previous cycle is that if you put on the volume, you can see quite clearly here that this particular candle, the hammer candle here, had one of the higher volume candles here. So the average, as you can see, is all around here, and some of these other ones stick out above that, and this is one of them. So this candle came about with quite a bit of volume, which gives it a little bit more power to keep moving it to the upside. Now, from a cycle's point of view, this is where we expect this cycle to now end, around about the end of April, and 60 days will take it to the 29th of April. Now, as I mentioned many times in my previous videos, is that what we really need to get was above the 96,000 for the end of the cycle, and obviously we haven't made that. So what it does is the probability seems to be on the side that we're going to more than likely consolidate within this range that we've got here. We've got our 99,000, which I've just been talking about, and then we have the top of the long-legged candle, which is at 104,000, and then the 109,000, the inauguration day high that we got. And because we're making such a big move from a lower point, there's a high chance of this petering out before we get to the 109,000. So the best I think we can hope for in the current cycle that takes us to the end of April would be a retest of the 109,000. Now, because we're coming up to that for the first time, so if we do retest it, and there is a good probability that we will, when we come to retest it, there is a higher probability of getting rejected at that point. And if we can retest it a few times in this cycle and manage to stay above the 96,000 here, when the next cycle starts in May and June, then we'll be in a much better position to break the 109,000. And that may well be the time when we go and make the big moves with a few more God candles over here. However, if we do break up above this, then that would be an incredible sign to say that we're on our way, and it won't then look back, and then the 109,000 will be very much in the distance. So this is what I'm expecting in the coming cycle. We've got quite a bit of resistance. We've got quite a bit of resistance with the green line of the pi cycle at 97,000. Then we've got the resistance at 99,000. And then we've got the resistance at 104,000. And of course then at 109,000. So those four particular resistances should take its time to work themselves, to process them through between now and the end of April. And so this particular cycle to the end of April, I wouldn't be expecting with a higher probability to break the 109,000. Of course, if it does, that would be an incredible sign that this may well be your last opportunity to get on board the Bitcoin train, because that will be a sign that will take us to the end of the current parabolic phase. And finally, moving on to the Bitcoin miners and the private membership that we run here at Wisdom Bites. I was quite surprised that we got about 30 to 40 new members, especially under the current conditions, because normally the experience we've had here is that people generally get on board when they see a big move to the upside and they want to get on board. Just like in a normal market, people tend to FOMO in. And I mentioned last week that we've had this pullback from the $30 mark down to last week, which was nearly a 60% move down. And it's not usually at this point that a lot of new members join. But this time around, for whatever reason, I'm not quite sure, we got an unprecedented number of new members here. So I think maybe some people can see the big move that may well be coming here. Because what we've got with the Bitcoin miners is a much greater volatility than Bitcoin itself. Because you can see quite clearly, after every major fall, even if you call this a fall, and this one here, and this one, after each of these major falls, you've had massive increases. Like this one was 200%, this was 150% to this level and went on to be over 270%. And this one here, to the recent high that we got at $34, was a 380%. This one was a little bit more modest at 96%. And this was the last one that we had, which took us to $30 of 130%. So obviously this pattern, if it keeps repeating and you have no reason to doubt that it wouldn't repeat, the beauty about this particular low here is that we have actually made this particular range, and in the final phase of the bull market, having tested this now 3 times, and we know what happens on the 4th time or the 5th time. So this time around, there's a high probability this is going to break. So we may well be on our journey now for the final phase of the parabolic move, which is going to take this to the end of the bull market. And our target with Marathon Digital Holdings in the private membership is around about the $150. Now that may seem incredibly ambitious when you consider the price today in the pre-market is at $15. But as we saw in the previous cycle, the last phase of the parabolic move, which really started here in September 2020, about a year earlier from the end of the bull market, that took it to a 54x for Marathon. So these things are incredibly volatile, and where there's adversity, there is opportunity. And obviously this kind of volatility is not for everybody. So obviously for those people who are not able to ride these 50, 60, 70% falls from time to time, then this is really not for you. But for those people who can see the opportunity, if you're interested, you can join us with the private membership. If you want to join us on our journey to the end of the bull market with the Bitcoin miners, and many of the members are there because I cover the Bitcoin analysis on the Wednesdays and the Fridays videos that we do specifically for the members. All you have to do is click the join button here, or in the description box, you've got the Bitcoin miners membership join link here with the red button. And for the price of 1 coffee per week at £12.99 per month, you'll have access to the membership tab here, where we do a market update every single night at the end of the close of the trading session, Monday to Friday. And this is the kind of thing that we do here. Did a quick update because we'd had this closing of the candle to give us a signal that we've come to the end of the current cycle and the start of a new 60-day cycle. And then on the market updates that we do on a regular basis, so I do a comprehensive summary of the day's play with Bitcoin and the Bitcoin miners. And we also do some mindset training in order to get our mindset in alignment with good trading and good investing. And this is the journey we're on with the Bitcoin miners. We started off right at the bottom here, and we've been riding all the oscillations all the way to the top, and we've just got a little bit more to go, so maybe a few more months to catch the last big parabolic move to wherever it's going to take. We don't have a specific target in mind, so our range for Bitcoin is from 150 to 500,000. That end target could be whatever it's going to be, and we have the Bexit indicators, which are our indicators which I showed you in last week's videos. So if you want to have a look at the latest position of those indicators, have a look at last week's video, and I'll be covering them from time to time as we go along. But this is the journey, the last few months until the end of the bull market, and then we'll take it from there whether we want to continue with the private membership or not. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.